Hi everyone, Janice Levendahl. And yes, the question is, during these times, should I make my mortgage payment or should I not? That's the question a lot of people are asking right now. And I want to share with you, there was actually a nonprofit organization that I'm on the board with, and we did a webinar in regards to this particular subject. And I wanted to share this to as many people as I possibly could. So I'm putting together the video, and you can listen to the video and you can then be able to decide whether or not you should make your mortgage payment or not. But it is a big question because we know a lot of people are a lot of our consumers out there are getting mixed messages as far as whether or not it's going to affect your credit or not. You're going to have a big balloon payment at the end if you don't make your payments right now. They're saying, oh, it's a forbearance, but what exactly does forbearance mean? And that's the thing. It does not mean that you don't have to pay it back. So even though it's a forbearance, you are still going to be responsible to pay those funds back. And then also, how is that going to affect your credit if you do not make your mortgage payment during these times? Because even though I know the governor has said that it's not going to be marked on your credit as late or missing payments or anything like that. But however, there's a possibility still that it's going to affect you if you decide you want to try and refinance later or something like that. You're going to have probably a little incubation period that you're going to have to wait on. So please tune in, listen to this full video so that you can get as much information as possible. And then of course, at Levendahl Realty Group, we would love to be your resource for more information. So I have a team, I have lenders that are at our fingertips, so that if you do need to ask some questions in regards to your mortgage and get some more clarification, we can definitely help you with that.
Hello, everybody. My name is Marisa Fletcher, and I am going to be speaking to you guys today with Amir. Hi, Amir.
Hello, hello. How are you?
Wonderful. So let me share my screen. Give me 1 second to do that, please. And share. All right. And then, okay. All right, so my name is Marisa Fletcher, and I currently serve as the assistant treasurer on the Inland Empires Association of Realtors, as well as I am on a board member with KRAB, and I'm the broker owner of Remax Kings Realty here in Riverside, California. And Amir and I are getting together today to share with you guys the information that's out there on the market regarding the value of making your payments or what some of those other options are. So we're just going to go ahead and get started with our information. And Amir, I'm going to let you go ahead and take it away.
Oh, thanks, Marisa. My name is Amir Elahi, and I'm with Neighborhood Partnership Housing Services. We are a nonprofit HUD-approved counseling agency located in Rancho Cucamonga. I've been there a little over 3 years, but I've actually been a part of the NeighborWorks network, which is a national training network that does certification for the HUD-approved counseling agencies now for almost 20 years. So my background is really mortgage servicing and housing counseling, but I've also been a licensed realtor for the last 15 years. So this is kind of a portion that's near and dear to me. And so we were talking about bringing this session to the realtist, really to help understand and just be of a better value to our communities as we move forward. So we know that as a result of COVID-19, there are lots and lots of people that are being affected by this pandemic. And again, it's one that we haven't seen ever in our lifetimes. And so we know that countless numbers of people have lost jobs. And then there's another subset of folks that are actually underemployed. So their hours and income has been reduced drastically. Result is, of course, we are experiencing record unemployment Forbes reported last week that the unemployment rate was actually at 20%. Since 1 month ago, there have been 26.5 million people that have actually filed for unemployment or filed first-time unemployment claims. And so last week, there was actually a reduction. There was about 5.5 million. The prior weeks had been 6 million people had filed. So we are seeing a tremendous amount. And then as a result of that, of course, those of you who are really paying attention knows that then, as Rick stated, it sounds like they have a new direction on the credit score. So we saw credit scoring increase on FHA loans. We saw credit scoring and also down payment increase on some conventional loans like Chase. And so we're going to talk today about not only the value of making your payment, but also what some of the options are if folks aren't able to make their payment, and some of the details of what that's going to look like. And I always, as I've been talking about this now, probably this is my 5th or 6th interview or Zoom call that I've done on this subject. My first and finite statement is, please tell your borrowers or please tell your past clients that if there's any way that they can make payments and make them on time. We know that Friday is May 1st. So if there's any way that they can make those payments and make them on time, that is the absolute best option right now. So Marissa's going to go in and talk about some of the other details in terms of making your payment, and then we'll go on from there.
Thanks, Amir. And so what I'm going to cover and explain is some of the information that's out there about payments and what kind of options that are out there for consumers. Because I know that even as a owner-broker of real estate company, I've been in this business for almost 2 decades now, that it was even questionable for me, some of the wording and some of the terms that they're using. So what I'd like you guys to do is, as I explain these next couple of slides, please pay attention to the wording, right? Because I think the wording makes all of the difference when it comes to what options your clients are going to decide to go with, or you're going to go with when it comes to this COVID-19 situation. So the first thing I wanted to talk about was the order, Governor Newsom's order that he made on Wednesday, March 25th. And in essence, Governor Newsom made an announcement that there's over 400 banks, charter banks and credit unions that have agreed to give homeowners, any homeowners with a mortgage, a 90-day moratorium on their payments. So the key word is the moratorium, a 90-day moratorium on their payments. And that is, of course, it has to be based on job loss or a hardship due to COVID-19. Okay. He also named some of those banks, and there's some of those big banks that are involved in this 90-day moratorium, including Chase, Citibank, US Bank, and Wells Fargo. Okay. But over 400 banks agreed to go along with Governor Newsom's order. Now that order has 4 major parts to it, and I'm going to break down each of those parts. The first part is just basically that the financial institutions that are agreeing to the order, that they provide some type of a streamlined process in order to apply for that moratorium, or to let them know about that hardship that you're experiencing, okay? So the first part of that is a very streamlined process. The second part of that is that all the approval terms of the moratorium, the forbearance, the deferral, watch those keywords, that all of those approval terms are spelled out to the consumer or whoever applies for that program or for that assistance. And then the last part of that was that if that borrower still has a hardship after any initial moratorium, if they still have that hardship, that the financial institutions allow them to review their situation again at that time, and maybe there'll be additional assistance or an additional moratorium after the initial one. So that's the first part of that order. The second part to Governor Newsom's order is that based on this COVID-19 relief, or this COVID-19 help, that no late payments be reported to your credit. So again, watch the wording, because no late payments can be reported to your credit. So they call that no negative credit impacts. But as we go a little bit further in this discussion, you'll find there's some couple loopholes in that, but there'll be no late payments reported, okay, per
Right.
Governor Newsom's order. Third part of that is that for at least 60 days following these 90-day moratoriums or following this help for at least 60 days, that no foreclosure or eviction processes begin. Again, that's a part of his order. So that would, in essence, say someone needed 90-day help and they had a 90-day forbearance or a 90-day deferral. After that time, nothing can happen for 60 days to allow them to redefine their loan or decide what they're going to do at that point. So that's the third part of this order.
Let me add something there to that third part, if you don't mind.
Go ahead.
So one
please.
of the things that we experienced last time, of course, some of you've been around since the last crash, and so one of the things that we experienced is, if you remember, it was probably 2007 and early 2008. It was actually President George W. Bush that actually instituted a very similar moratorium. And one of the things that we found out during that time is that while the moratoriums can actually be instituted by the states, and even at that point, it was from the President of the United States, these mortgages are also backed or have pooling and servicing agreements. And so what we found out was that a lot of the servicers, not necessarily the banks, especially he named them, actually have obligations to continue the process because of the agreements that they have with the mortgage investors. And so what I'm always cautioning people about is, while we're looking at the moratoriums, especially on foreclosures, as well as negative reporting, one of the things that we also have to look at is what are the actual investor requirements calling for. And so we had a big tiff because I worked for an organization, nonprofit, and they were basically saying, we don't care what the president says, we've got a legal document. And so that doesn't mean that people aren't going to have a heart, and we're believing that they will. But I do know that the investors, the last time there was a moratorium that was issued, some of them really kicked back and pushed back, saying, hey, I understand where we are, but we also have people that we've got to pay. So we just want to make sure that people are getting documentation of that. And one of the things that we're talking about is that we're encouraging homeowners, especially homeowners with mortgages, even though you're getting the information from the governor, you absolutely have to contact your servicer. And you've got to get names and you've got to get documentation in writing, just to be able to cover all of your bases.
Yes, exactly. And thank you for bringing that up, Amir, because that's exactly why we're even having this discussion today. I mean, because the wording that's in the, that we're receiving in the market, on the media, or wherever, says one thing, but we know that the reality could quite be something. It could be something totally different. And as a matter of fact, once we get near the end of this sharing this information, I'm going to actually share a personal experience that I had regarding my mortgage that might not quite fit all these guidelines either. So again, thank you for sharing that with us right then. And then the final point for Governor Newsom's order was that there were no late fees applied during this moratorium period. So no late fees can hit the consumers or hit the report. And then they also implemented that some other fees could be waived or reduced based on early withdrawal of CDs. And again, Amir, I know that you have some more information regarding that there as well, the CD withdrawal. Can you share that with us?
Yeah, so they actually did, and not only does it respond to CDs, but also 401k, and especially the state teachers retirement fund. So it's CalSTRS and CalPERS are actually waiving their requirements for penalties on the early withdrawals. I'm saying that wrong, withdrawals. But here's the deal, from a financial standpoint, if you go in and you get money and they send it to you, from a tax standpoint, you're still going to be liable. So again, we're encouraging people as as real estate professionals and mortgage professionals, we've got to be advising our past clients and our constituents that they also have to bring in their team. And I think that's the best way to do this. As we start disseminating this information, we've got to really look at it from the reporting standpoint, from the tax standpoint, as well as from the mortgage and real estate angles.
I agree with you there, 100%. Okay, so now with all that being said, so I explained what Governor Newsom's order consisted of, right? And as Amir mentioned to us, that although the order says one thing in certain areas, it still depends on the lender. It still depends on your documentation. It still depends on your contracts. So going into that, Forbes released an article just a few days ago that talked about this COVID-19 and the effects of it on mortgages and the mortgage industry. And they shared with us that more than 3 million homeowners have filed for a forbearance since mid-March. Okay, so since this COVID-19 shutdown has happened, there's been, over 3 million Americans that have filed for forbearance. Those forbearances can be anything from 90 days, and we're hearing that it can be as long as 360 days, according to Forbes. So it just depends on the homeowner and their specific situation. But here's the key. What happens after that 360 days or that 90 days or whatever that period is? What happens after that? Well, a lot of homeowners are being told that at that point, at the end of that forbearance period, that they can reevaluate their loan. And then they give you a bunch of options, okay? And we're gonna cover what some of those options are. It is even said that maybe they could call for a repayment at the end of the forbearance period, where they could be not asking for a balloon payment, but some type of a repayment schedule, to where at the end of that 90 days, there may be another payment that's due. The thing is, we just really don't know yet. There's not enough information in the market for us to know exactly what's going to happen after these forbearances. And the reason that's difficult is because people are applying for forbearances now, and this is going to affect them in some way. Wouldn't you agree, Amir?
I do agree. I do agree. And I think that one of the major things that we're going to find out is, again, every servicer is going to be different, because these mortgages in some instances are sold on the secondary market. Now, and I may be jumping ahead, but I'll put this here. The FHFA, which is the Federal Housing, I always forget it, FHFA. They basically are the new Fannie and Freddie. They actually released a statement yesterday, was it yesterday or day before yesterday, that they're going to be purchasing all of the loans that are backed by Fannie and Freddie that are applying for forbearance. So that's really good news, because that should be an additional protection against foreclosure. And their job is really to help people stay in their homes. Yeah, it's the Federal Housing Finance Agency. Thank you, Karen.
Nice.
That's why we're a team. Remember, I just said we need to be a team, right? You got to have your whole team in place.
Exactly. Okay, thank you for sharing that, Amir, because like you said, that is going to be very helpful with some of the services or some of the banks, so that they don't have to, go to foreclosure measures or whatever, and they can still service their investors. I mean, because quite honestly, the investors have to get paid some way, right?
Right. Investors rule.
Make money on their return. Okay, so now we get into the part where we talk about some of the different options that are being offered to people out, consumers, or your consumers are out in the market. And we've been using this word forbearance, okay? And that's the key. Initially, Governor Newsom's order was for a moratorium, right? So what does that mean? Some people thought maybe that was a deferral, or it could be a deferral where they take your 90 days worth of payments and put it at the end of your loan, right? Deferral, simple deferral. But what we're finding, or what we're reading and hearing, is that a lot of servicers are offering forbearances. So what is a forbearance? Well, a forbearance allows you to temporarily suspend or reduce your payments for a specified time period, or specific time period, right? So that 90 days or 180 days that we keep talking about. In many instances, banks use it as a loan modification trial period. Okay, so they're putting you on a trial period with some type of terms, and then at the end of that term, they then determine what's going to happen with the rest of your loan. Okay, but the key when it comes to forbearance is that forbearance is not forgiveness. Okay, you are going to have to pay that money back. Consumers are going to have to pay that money back. The key question is how? How? So that's why Amir, real estate professionals, myself, that's why we advocate if your clients or if consumers have the ability to make that mortgage payment, that they continue to do so, so that they don't get caught up in the end, right, with one of these special repayment plans. So again, the key here is just that forbearance is not forgiveness, and the money's got to get paid back in some way, shape, or form. Okay. So now what we want to talk about a little bit is, well, can a forbearance affect someone down the line, or can it affect me down the line if I decide to take a forbearance? And we briefly touched on that a little bit already. Amir talked about how before they said that it wouldn't affect credit, right? Or like how Newsom's order says there won't be any late payments reported, right? But it could still affect your credit. For instance, one of the things, the credit impact that it will have is that there is a special code that will go on your account that says that you're in a forbearance, or that you were in a forbearance. And I just heard our sponsor mention earlier about, he briefly talked about that if there was a forbearance, that may limit your ability to get a new loan for a certain amount of time, for a certain time period. Amir, do you know anything more about that you could elaborate on that specifically, or?
Yes, and it does depend, but basically that does not show up as a late payment, but it does show up as a forbearance. And that code, what lenders are saying is that is a missed payment. And so, because remember that lenders then tighten their requirements and increase the credit scoring. And so lenders that I've spoken to, and I've spoken to several, are saying that that's at least 12 months before you are going to be able to qualify for a refinance, even though that's not going to show up as a late payment. So at this point, everybody is very cautious and protecting themselves. And so with the market really tightening itself, or they're clamping down on late payments, increasing credit scores, increasing down payments, this is going to be something that will impact you in a negative way.
Yes, yes. So just like you mentioned, that 12-month restriction. So if you have a consumer, that wants to refinance or, do something else with their loan, if your account was coded with that code, you might be restricted for 12 months, depending on who that lender is. So that's something that we should make consumers aware of if they decide to go ahead and go that option or go that route. They might want to look at all their other options prior to, doing that, if they have that option. There is also the repayment can affect you in the long run or in the end, because what would happen is, again, at the end of the forbearance period, the lender then looks at your information, looks at your hardship situation. Guys, it looks like a short sale packet that you're submitting, or a loan mod packet that you're submitting. They send you the application. It's 20 pages long. You've got to provide all the, the consumer must provide all their documentation, bank statements, tax returns, all that stuff to prove that they have a hardship. And then at that time, based on what type of hardship it is that they have, the lender says, okay, this is what we'll offer you. Repayment, more time, restructuring of your loan, those kind of things is what we're seeing out there. And then ultimately, how it could affect you is say at that time that you're offered these repayment terms, and again, we don't know exactly what those terms will look like. But say that you are at that time offered repayment terms and you're not able to make those payments. You're not able to catch up. Your options at that time is basically a deed in lieu of foreclosure, or losing home ownership, or losing the property. And that is definitely what we don't want to have happen to anyone. So that's why we're sharing this information with you guys. Amir, do you have anything to add to that?
No, I think that again, and we talked earlier about NPHS being a HUD-approved counseling agency.
Yes.
And I think that that could be a very valuable tool for consumers, that are actually considering whether it's a repayment plan or forbearance, or even considering applying for a modification.
Exactly. And then we wanted to go in again a little bit more detail about the different forbearance plans that are being offered to consumers and that we've seen that are being offered out there. Again, one is reinstatement. At the end of the forbearance period, the loan is then reinstated. And the thing about reinstatement is that there's a lump sum amount that needs to be paid at that time.
Right.
Now, again, we don't know if this is what your lender or your consumer's lender is offering, because we don't know, it's based lender to lender. But I know for a fact that some lenders are offering that option, are telling you that that would be what's next after the forbearance. It would be what's called a reinstatement. Okay. Again, lump sum of money. If someone's having difficulties or hardships, paying monthly, it just increases the likelihood of there being an issue when you've got to come up now with 90 days worth of payments or a portion thereof.
Sure.
Another plan is a loan modification. A lot of us realtors are familiar with loan mods already. Again, that's something that the lender sends this long detailed package. You got to complete it, and you have to get approved for them. When I got into real estate, it was after the first crash. And I remember when everyone was applying for loan mods, and I think the numbers were something like 90-something% of people don't get approved for them. Do you remember that, Amir? Was it something like that, or am I just...
It was really huge so it was all over the map on the modification piece. But one of the things that we experienced, because again, I was kind of in the counseling world, moving over to real estate at that time, was that there are investor requirements or investor guidelines on the modification. So here's where it really showed up for us, is that some of the guidelines for investors state that there could only be one modification for the life of the loan.
Oh.
Now, if that homeowner hasn't refied and they're still in that same mortgage, then again, they need to be seeking either a HUD-approved counseling agency or someone who's familiar with this, because they may not qualify based on what the investor says. So there are a couple of things that are floating around, which is why I think we're going to, as realtors, we're going to be valued advisors, and we've got to really study up on this. So the CFPB, which is Consumer Finance Protection Bureau, came out with a statement that said that their forbearance plan, according to the CARES Act, so this is different from Governor Newsom, but according to the CARES Act, is 180 days. And then after 180 days, they can actually do another evaluation and extend it for an additional 180 days. So I think I did hear you say that they could actually go up to 12 months. But the challenge is going to be that neither the CFPB or FHFA can supersede what the investor guidelines are. Right. And so we've got to be asking, as people are talking to us, have you had this particular loan modified or restructured before? Because that could make all the difference in what direction they're going to take at this time. So that really, really is something that we want to be aware of as we're assisting our communities.
Thanks for that, Amir. And you know what? That is so true, because right now I'm just sharing with you guys some general or basic information. But when you dig a little bit deeper into each of these options, they do all have those caveats to them, right? Like Amir just said, some of these options won't work if you have a lien against the property. So it's totally an individual case-by-case situation. Another one of those forbearance plans is the restructuring of the loan, which I know that was mentioned quite a few times, where they can restructure those missed payments into your current loan or into whatever balance it is that you have. And then you can pay it back that way, where if your payment was $1,000 a month, now it's $1,100 a month or whatever. And then another one of the options that the banks are offering is that you just begin resuming your normal payments. don't know exactly what that means. Like I said, there's just so many options that they're offering to everyone. But that was definitely one of the options, is just you begin resuming your normal payments. And I don't know what happens to what happens to I'm just
Right.
not sure.
Right. Well, one of the things that they'll be able to do is, and again, so everyone is going to be case by case, but it's good that we could go over some scenarios while we're actually running through the forbearance plans. Or one thing would happen, let's just say that you have a homeowner who's missed a total of 6 payments, and they actually have a 30-year loan. They've been paying on that for 12 years. They've got 18 years left. We'll use a $3,000 a month payment. So they got $18,000. And what they may do in terms of resuming the ultimate goal for all of these plans, by the way, whether it's loan restructuring, loan modification, is to resume normal payments. And so they'll take that $18,000 and put it back into the balance of the loan. But they may stretch that loan out from the remaining 18 years to 20 or 25 years, just to resume normal payment, so that it's not an increased payment that causes an additional hardship.
Makes total sense. Got it. Thank you for clarifying that, because I did not know what that meant. So in essence, that pretty much wraps up our discussion on what's being offered, what's out there. We wanted to clarify some terminology so that when we're talking to clients or consumers, we can make sure that they know all their options, and they know how to explore their options before deciding which way they want to go based on this COVID-19 situation and pandemic that we're in. Here we provided some resources, NAREB, KREB, the Inland Empire Association of Realtors, and as well as Amir's organization, the Neighborhood Partnership Housing Services. His organization is nonprofit. They sit down with consumers, they review their situation, and then help them navigate some of this terminology, or some of this process, help them navigate through it so that they're not feeling lost throughout that process. And I think that's something that, as realtors, as realtors, that we need to share with all of our consumers. Hey, we need to sit down and think about this before moving forward. I wanted to share a quick story, and then I'll be done, but I wanted to share a quick story because it's personal knowledge, a personal scenario, and it touches all on what we just discussed, which is why I'm one of the presenters of this information. So I'll use myself. So back in March, right after March 16th, where our offices we had to shelter in place, offices closed down, I reached out to my mortgage company because I wanted to find out what options it was that they were offering to homeowners, right? Because in my mind, I'm thinking, well, I'm okay in this situation right now, but how long is this gonna last? What if this lasts another however long? And hey, maybe I can defer my payments. I'll keep making those payments, but if something comes up, I've got that safety net, right? Where I don't have to worry about anything. I've got that safe. So that was my mindset, my thinking. So I called into my lender. I'm gonna leave my lender nameless, but I called into my lender and I asked them, what is it that you guys are doing for consumers? What is it that the bank's offering? The first thing that they wanted to know was I working or was I affected? Yes, I'm still working. My mortgage is already paid for the month. I just want some information. I want to know what it is you're offering. They, after going back and forth, for some reason, they want you to say that you're in a hardship, okay? But no, I wasn't in a hardship at that point. But anyway, they mentioned forbearance. They said the word forbearance. Now, I was specifically asking about a deferral. I'm like, do you guys have a deferral program or something like that? They brought up forbearance, okay? And I said, well, what is that? What are the details of that? Oh, well, ma'am, if you're interested, we can send you information, right? Where we can put you on a forbearance plan and we'll send you that information. But ma'am, you have to call back in April because you're not late, you're current. So you can't even do anything right now if you wanted to. I said, okay, well, I just wanted information. There's no way I would do a forbearance. There's absolutely not. From the mention of the word forbearance, that's a no-no to me, because in my mind, I don't want to be stuck making a lump sum payment, okay? So no, thank you. They're like, well, if you're interested, if you do get impacted by COVID-19, right? So if you are completely out of work and you're impacted by COVID-19, call us back after April 1st and let them know, and then they'll put you in their forbearance program, okay? So it's okay, whatever. Hung up the call, ended the call. No call back, no nothing. In April 1st, I started a refinance for my mortgage to lower my payment, okay? So I'm going along with my refinance. Everything is going fine. We get towards the end, maybe sometime last week, my lender reached out to me and asked me, Marisa, are you on a forbearance program? I said, absolutely not. No, I'm not on a forbearance program. Well, your bank is indicating that you're on a forbearance program. And because you're on a forbearance program, if you've applied for a forbearance, you won't be able to do this refinance, right? And you won't be able to get any other financing for up to 12 months. Okay. So I'm like, well, no big deal, because I didn't apply for a forbearance. Payments made, didn't apply for a forbearance. Long story short, I had to call my bank to tell them that no, I don't want a forbearance. I'm actually in the middle of a refi. We're about to close. I don't need a forbearance. I had to call my bank, sit on hold for a couple of hours, have them code my account, because for whatever reason, they now had me in a forbearance program. My bank had me in a full forbearance program. I had not signed anything. I had not filled any paperwork out. After speaking to them, I checked the mail, because I don't check it every day, but I checked the mail. I had these packets in the mail telling me about forbearance. Now, get this, there were 2 letters. One letter was in a regular envelope, 3 pages long, that's it. All that letter said was, Marisa Fletcher, blah, 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 no payment, May, June, July, payment 0. Nothing at the end of it, no mention of a balloon payment, just no payments. If you want this, sign this and send it back to us by the certain date, okay? I didn't send it back, right? But I was looking at it like, whoa, because I've never seen this paperwork. I'm like, well, okay, no payments, but where do they say what's gonna happen after? Like, how would anyone know this? The second packet contained like 25 pages. The first 3 pages or 4 pages were all my forbearance options. Some of those options were included in this presentation today. They had repayment, deed in lieu, reinstatement. There were like 8 different options that could happen after this initial forbearance. Again, here's the key. How do I know which option they're going to go with? How would I know that? How would a consumer know that? Guys, the consumer wouldn't know that. I'm a real estate broker, and it still is not clear to me exactly what it was that my bank was offering me. All that I know is that they're offering me a forbearance, and that something could happen at the end of the forbearance. We'll figure it out when we get there. Does that make sense? But I wanted to bring up that story because I wanted to share, just like Amir mentioned, that although the order says one thing, although the state might say one thing, your governor might say one thing, right? It is strictly up to those banks and what it is that they decide to do at the end. It's strictly up to them, okay, and how they decide. They had actually put me in a voluntary forbearance plan. Like I said, I was going back and forth with my lender because I'm upset now because I'm like, I never asked for forbearance. I shouldn't be in a plan. Why is this affecting my loan? Okay, I actually had to call them twice on 2 different days over 2 2-hour waits to tell them I'm not on a forbearance, take that out. My lender did confirm to me at that time that if that hadn't happened, it would have been 12 months for me to be able to do a refinance. 12 months off the bat.
Right.
So I just wanted to share that story because it touches on the things that we talked about. All I did was inquire as to what their options were. The bank told me forbearance. I didn't call them asking for that. And just from that alone, literally just from that alone, it initiated a voluntary forbearance plan, right? So I just want to share that, you know, if your consumer needs to call for more information, please have them call, but please be very careful with the wording that they use, because if that's not something that they're interested in, you know, we don't want them to get stuck with issues or anything like that just based on an inquiry call.
Right. So two quick things that really have to revolve around your story. And one of those is the fact that initially the forbearance was as a result of the CARES Act, was initially just for loans that were Fannie and Freddie. But just like when Chase Bank went to 700 credit score and 20% down, other lenders followed suit. And so if anybody remembers what it was like before, it was weeks and weeks and weeks before you could get, number one, somebody on the phone, and number two, somebody actually could get a package out to you. So it literally took them over a year to actually get a system in place to actually start working on modifications before. The forbearance, which you experienced, was like an automatic forbearance, literally so that they can either figure out what they're going to do on the back end and start to reactivate some of those systems that they had before. And number two, it really was kind of a placeholder to really help people, to help the banks more so than really the consumers. And it's not a bad thing on the banks. They're basically saying, this CARES Act just came out and we're going to get a ton of calls. So the easiest way to do it is grant everybody a forbearance so that it'll give us a chance to actually get our systems in place so that when this thing actually kind of gets over with and folks get back to work, we're actually still maybe 90 days or more away from seeing the initial impacts of what's really going to be going on the mortgage side from a forbearance resolution standpoint. So the data earlier said, hey, there were 3 million folks that had already filed for forbearance or asked for them, but the resolution piece still won't show up for another 90 days or so.
Right.
So that really is something that we've got to advise people of and let them know that they've got to be aware that some of this is automatic and it really is helping the bank get themselves together versus really being a advantage for the borrower. The other thing that I wanted to remind you is that on the Consumer Finance Protection Bureau website, the video that they have also talks about a letter or proof of impact
That's right.
that they're going to ask for, not for the forbearance. So they're almost saying that the forbearance is almost automatic. You don't have to prove anything, but the resolution piece, whether it's going to be a modification or a repayment plan or a restructuring, they're going to ask for proof that you've been impacted by that. And so again, we don't want people to go out and we made a joke yesterday. We don't want people to go out like the Lakers and get a benefit that they may not be absolutely deserving of, and then have problems down the line.
Right. Good point. Very good point. So thank you for sharing that with us, Amir. I mean, and on that note, well, I'll go back to our wonderful president.
Oh, thank you. You guys, that is why we called this presentation The Value of Making Your Payment. You have given us a great definition of that. Great job. I did see a question in the chat box that I do want to pose to you both. Can they add the balloon payment to the end of the mortgage?
So it is possible for them to do that. It is not automatic. And so there are going to be a number of circumstances that will allow that to happen. Again, one of those things is, they're going to have to, be able to document that this was a result of COVID-19. The second thing would be, what are the investor guidelines? And then probably the third thing would be, is this something that they've actually had before, or is it a newer mortgage? So all of those things will be considered in terms of being able to, and I think the fourth and most important thing, by the way, that would determine whether it could be added or not, would be the actual ability to make future payments.
Right.
Thank you for that, Amir. Right now, I didn't see any more questions in the chat box. I do see a lot of great job. I do want to, let's see, stop share. Thank you, ma'am. So I do want to, let me right here. Okay. Information changes daily, and we want to provide link and additional information to you, informing you of things as they come along. So I do want to share with you that we do have another event that's coming up next week. We actually have two. The first one is going to be Utilities and Moratorium. That's on May 5th. And then on May 6th, we're going to have Refinance and Industry Updates. the Inland Empire Association of Realtors, and I did ask you to type in the box, great job, Realtors. We want you to know that during this pandemic time, that the Realtors continue to bring information. We are a resource to our Realtors family and our Realtor family. So the value of making your payment, presented by Marissa Fletcher and Amir Alahi, I'm sorry. What a great job you guys did. We're really proud of you. We're looking forward to presenting more information as it comes available. If there's no more questions, again, I want to thank you for joining us.
Well, there you have it. I hope you found all this information very informative. Again, I am a board member of the National Association of Real Estate Brokers here in the Inland Empire, and our goal is to educate the community with all things in regards to real estate and home ownership. So please, if you have any questions, you have my information. You can definitely give me a call. It's 951-541-1503. And take this video and share it with your friends and family, because there's great information here, and I think it's going to help a lot of people be able to make the right decisions. All right, take care. Have a fabulous day.